So my view on Bitcoin kind of remains what it always was, which was coined this a while ago, is I think of it as the kind of perfect collateral layer of this new digital economy, because it's pristine collateral in the way that it can't be debased. You know, if you think of how, let's say, a treasury bond works, it's kind of weird because when everybody needs treasury bonds, the Fed creates more of them. So your collateral is actually worth less over time, which is the debasement of money idea. Now, you can't do that with Bitcoin. So if Bitcoin is your base layer of collateral, then what you get is an ability to get paid for people wanting collateral in a collateral squeeze, which is what the financial system needs at its base. But it became obvious to me, Bitcoin doesn't solve every problem. It solves certain problems really well, and others it doesn't solve as well. That was really my evolution. And then as the space broadened out, you realized, okay, this is an incredibly deep, fast-moving space with so many applications that it doesn't make sense to be all on one blockchain. Different blockchains will specialize in different things. So that's basically my Bitcoin hypothesis.
Would love to get like what you're seeing in the markets now, as an asset allocator.
The macro environment is, I think, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. So the narrative was the inflation shift. Inflation shift last year, I think what happened is inflation was real and inflation destroyed marginal spending and marginal investing. And I think we've seen it in meme stocks. We've seen it across the market. We've seen it in cryptocurrencies where the marginal investor got marginalized because they didn't have enough money. So I think that was one of the features of what happened. And the bond market was pricing in some more inflation, but not a great deal. However, that narrative is shifting. All the forward-looking indicators I look at look like both growth and inflation are slow much faster than the market expects. So then they're struggling to think, how do we price growth equities? How do we price other types of equities in that shifting environment? Because we're going to have a period of time where growth is slowing and inflation is going to look high, and then inflation follows because inflation lags. So I think we're at a shift. My general view, and I've held this for a while now, is that the central banks are more likely to get away with one hike, two hikes max, before they're looking at stimulative measures again. Because I don't think the economy has got traction, and we don't know what the true traction is of the economy until maybe 2 years, 3 years after the pandemic recession has followed through. That's very typical of every recession I've ever followed, is basically there is a growth slowdown that comes fast afterwards. The market panics, starts talking about recession again. Usually that doesn't happen. There's generally more stimulus. So I think it's very supportive of crypto prices overall. I think crypto's gone through that transition phase. We saw the marginal spending, investing in crypto go down. I think now all I'm doing is speaking to large institutions about investing. So I think the ongoing investment thesis continues. And I think that the central banks will be more dovish than people expect going forwards. So we should have a longer cycle with more tailwinds than most people expect right now.
Awesome. And just last question, do you think the correlations relative to other asset classes, how do you see that playing out? I know we've seen last few months quite high correlations with just tech equity. Would be curious to get your thoughts there on how that might evolve.
So look, everything is a risk curve. Every single part of the investable universe, and crypto is part of that risk curve. Sometimes it's correlated, sometimes it's not. When you go to a macro shift, everything gets a correlation of 1. Right. And we've seen that. So it periodically correlates and periodically decouples, depending where we are on the risk curve. It tends to be really decoupled in that mid-cycle phase where growth is okay, central bank policy is loose, crypto does its own thing. But it's when people are having to bring cash back, let's say you're a hedge fund, you've now got a mandate to invest in crypto, you've got your equity position blowing up, you need to reduce risk, the risk manager taps, as volatility rises, VAR means you reduce your portfolio risk, so you're selling crypto, even though you don't want to. It's a function of risk markets. We won't get around that ever, because everything is the same unless it's got no mark to market, which is why people like VC and people like real estate, because there's no real-time mark to market. But I think the correlation, crypto looks more like a currency in terms of its correlation, which is known as Bayesian in distribution, which means it has passing correlations that shift always. And crypto does that because it's correlated to the bond market, it's correlated to the equity market, it's correlated to something else. and it comes and goes, and sometimes zero correlation. And that's very typical of currencies. People think currencies are interest rate differentials and stuff like that. Virtually no correlation to that at all.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.